Hey, welcome back to Everything Money. I'm here, as always, Seth, your handsome host. I'm here with Paul and Mo. We're talking about, we're going to do a fun thing today. We thought about this. And Paul, I want you, so many times you've been criticized, Paul, for, how would I say this? Letting your massive ego involved in your pricing and let people say. So I want to show you a company that Tim and I had some interest in. Just not even show the ticker. Who knows? I want you to just look at the numbers, regardless of what company this is, and tell me what you think about it. Your thoughts?
Sounds good.
He's eating the M&Ms. Mo is here too. Welcome,
Hi.
Mo.
Does he know the stock?
No.
He does not.
They won't tell me.
I'm going to show you the financials here, Paul. Paul, the
Can I turn around?
Yeah, the financials are behind you. I want you to take an honest assessment and tell them out loud so the folks can see what's going on with this company and what your thoughts are.
I think I already know the company.
Go ahead.
What do you mean, go ahead?
Don't make a guess. Just
Okay.
unbiased opinion. What's going on with this company?
So a $40 billion company with a revenue of 1.2.
Your initial thoughts.
I mean, that's insanely overpriced. Like software businesses are the highest multiples. And even if this were a software business, it's 32 times revenue. I don't even know any company that sells for that right now. Companies selling for 32 times profit are too expensive. We have a company selling for 32 times revenue, right? They have no PE. I mean, good gross margin here. This has got to be a software business.
Why do you say that?
Well, I think because I remember this from a company we've done before. And I think that's what it is. And it being 70% gross margin, it's got to be a software business.
All right, keep that to yourself. I agree. If this was a retail, we're looking at 4 to 7%. If it's Tesla, it's less than that because they're not a car company, Paul. But
yeah.
What else are you seeing on there?
I mean, there's no history whatsoever. No 5-year free. Oh, they have free cash flow in the last year. So maybe I'm wrong. Maybe it's not the company I thought.
Okay, keep it to yourself. $100 million in free
I know
cash.
you've said that 8,000 times.
All right, keep it to yourself.
Is Tim going to start fist pumping over here?
Let's look at the financials here. This is a picture of our pillars 3 and 4.
I have a... Go ahead.
An inkling?
I have an inkling, but go ahead.
Okay. Paul, your thoughts? So the operating revenue in 2019 was $420 million. It's up to $1.2 billion.
Wait a second. How did their gross margin go up so much? The gross margin went from 35% to 70%.
Yeah. Wow.
Sorry, I'm wrong.
Okay.
I'm wrong. Keep going.
Okay. The next slide is basically shares. This is the bottom of this page.
Geez, they doubled their shares in 1 year.
2, right? This is
in 2 years. Sorry,
2 years doubled their shares.
Jesus Christ.
Now this
okay.
is so you have a lot of opinions on shares, but this is a very drastic share.
By the way,
change.
this is not a share split. This is not a share split, guys. So for those who say, "Oh, it's a share split," first off, it's not, because if it was a share split, they go back to the previous transactions and alter the number of shares that were outstanding back then. So it's not a share split.
So as a value investor, does this already look like a screaming
it looks
deal?
terrible. No, it's
This
terrible.
looks like a screaming deal.
Is it cheap? Is it cheap?
First off, there's not enough data to even give me an assessment, but I'm sitting there going 40. The first data, 40 billion for $1.2 billion in revenue.
Tell me I'm stupid. What does that mean? I mean, just so little revenue on such a huge valuation?
Yeah, so remember, we try to pay less than 20 times profit for a company. Profit is after revenue and expenses. So to pay 32 times revenue for something, you're talking about, even if they have a 20% bottom line margin, you're paying 150 times profit for it. Which, if it's a growing company, which it seems to be, somebody might sit there and say, you don't get it, it's growing. Okay, well, how much growth is there going to be? I don't know. That's why we put in the stock analyzer tool. We'll do that and sit there and figure out, like, okay, is this something that can grow into its own value? But the other thing is, it's issuing shares like crazy.
No likey?
Well, of course not. It's doubling its shares. So now, even if it made $10 billion, it's equivalent to the company making $5 billion because they've cut your shares in half. That's it.
Let's keep going. This is current assets over liabilities. What do you see?
Okay, let's go to the liabilities part. $2.6 billion in current assets. Scroll that shit down. Oh, look at this. That's pretty good. So they have more cash on hand than total liabilities, and their current liabilities are, okay, that's a positive.
Positive. Okay.
Yeah, I think this is the company I thought it was.
Okay, how about this? Cash flow. Free cash flow.
Scroll down.
There isn't a scroll down. I must have missed it here.
Well, it's okay.
But we saw our
there
free
is free
cash
cash flow, though. They do have free cash flow.
Okay, so they have a little cash.
Yeah, good for them.
Not screaming deal quite yet, right?
That's
How about stock analyzer? You want to put in some numbers here?
All right, go low side, 25.
25. Okay.
35.
35.
45.
35. And can I tab across? 45. Okay.
Yes.
Share change. They've been selling shares. What do you think? I mean, you want it to go down, right? So
do 3.
3, tab.
2.
2.
And 1.
1.
And this is so low.
Okay, next
should be
one.
way higher.
Profit margin.
Do 10.
10.
17.5.
17.5.
25.
25. Okay.
Do the same numbers for the next one.
Okay. 10. 17.5. Why are you doing these?
That's profit margin and free cash flow as a percentage.
PE?
People are going to argue with me on this one. I'm going to be aggressive. Call it 20, 30, 40.
20, 30.
Which is insane, but go
40.
ahead.
Okay.
Same thing, 20, 30, 40.
20. Why insane?
Because 40 times earnings.
Okay, right.
7 years from now in a mature company.
Desired annual return.
15.
15.
12.5.
12.5.
And 10.
10. Okay, now, this is the stock analyzer tool you get as a patron member. We can go into this more. Paul, maybe turn this way a bit, so make sure we don't screw this up. I'm going to hit analyze and see what we want to pay. The current price of this company is $21.
Yep.
So let's take a look here. Okay, here we go, Paul. Take a look behind you here.
Oh, look at that.
Give me your thoughts on what's going on.
This is definitely the company I thought it was. Can I guess now?
Please do.
Palantir. Is it?
It's Palantir.
God, this guy's an idiot. Guys, I mean, this is...
Unbiased. Why did you think that?
Because it was the price to sales and the loss. 'Cause I remember thinking to myself, like, oh my God, they're losing this much money on this little revenue. And then number of shares outstanding solidified it for me.
Yeah, mine was the share dilution. Right when I saw
Yeah,
the share dilution, I was like,
that?
Tim, let me see the share dilution. I saw it. I was like, that's it.
So what does the stock analyzer tool tell us?
It tells us this company is overpriced. And the rosiest of assumptions, 40% revenue growth, huge margins, huge multiple of earnings and free cash flow, by the way. So this is going to be a very mature company selling for this. And you can find that today. You might be like, well, look, Microsoft's selling for 35 times. Yeah, in the biggest bull market of all time. Literally the most overpriced market of all time. It gets that price. If you want to invest hoping for the biggest bull market of all time, be my guest.
So this price,
You'll
Paul,
be sorely disappointed.
This price was $38 3 months ago.
Yep.
Of this stock.
Yep.
So it's fallen. It has fallen drastically, and it's still that overpriced.
Yes. Guys, when the Nasdaq was selling for $5,100 and 5,100 index in 2000, and you would have thought, well, if it drops 30 or 40%, and there were guys out there saying, no, it should be 80 or 90% lower, and then it fell 83%. Guys, it doesn't matter. If your gauge of value is just based on how big of a fall it is, I will sell you my house tomorrow for $20 million. You know what? I'll give you a discount. It's $10 million. In your eyes, like, oh, that's a 50% off. And in actuality, the house isn't worth anywhere close to $10 million. If that's your method of valuing something, you are stupid. That's just it.
It seems like the more I read about, and I don't read much, Paul, about value investors and famous ones, is they really let these companies develop. For such a young company, you might be a buyer of Palantir, say if they did great numbers over the course of 5 years, right?
And diluting the heck out of everybody just sucks.
And so, but you're okay, and you're teaching people like myself that I should be okay and missing out on a potential gangbuster.
Yeah.
Because at the moment...
Because none of the ones that... The ones that do awesome are the ones everybody ignores.
Yeah.
Nobody gets... The masses do not get it right. You've got to remember that about investing. If you make your investment decisions based on the opposite of what everybody's doing, you will probably do pretty well in life. That's just it. You realize that when my caddy at a country club is telling me how I'm wrong about Palantir and Bitcoin, I know I'm right about Palantir and Bitcoin. That caddy is a 19-year-old kid who's in college.
Thank you. I was going to say, make sure you mention the age.
By the way, I'm not trying to be a jerk. Even if it wasn't a 19-year-old kid in college, why is a caddy giving me financial advice? By the way, if your Merrill Lynch advisor is telling you that, they're probably wrong too, because they have to support what the market does. You have to look at things like that. This is just...
And why don't we just let these companies just get to the point of stability?
Because you're missing out, Mo.
I know.
Why try a 12% disciplined return over life when you can go gangbusters?
When I can get 100% in a day.
These are 100Xers. These are going to double. That's
true. Yeah.
So, Tim, I thought we could get one past him. But this little guy's memory, I love you. I
don't remember the exact numbers. Like if you asked me, I remembered 1.2 billion for revenue. For some reason that stuck in my head. And I was just like, man, maybe it's this. Then I'm like, no. Then the other thing is I saw the stock price and I'm like, okay, $21, that checks the box.
And the price to revenue.
Because I remember that was like,
I can't believe it. I thought we'd get him. I was trying to sway him saying, oh no, you'll never hear this one. You'll just... So, well, there it is, folks.
I got lucky.
if you want an unbiased evaluation of stocks,
Plus, I know you're obsessed with Palantir
I'm not.
in the sense of like,
I can't grasp.
that's what I mean. You're obsessed with like the whole fact like this is beyond stupid.
If you're like me watching at home, I can't quite grasp what is going on with this company because there are so many videos and the numbers, even to a stupid person like me, seem quite obvious. And so I just don't. We are missing it, but you're right, Paul. If I invested in 100 of these over the next, and again, I'm starting to envision my life investing like you for the next 40 years, 50 years.
Meanwhile, he talks about buying a bar even if it makes no money.
I love that bar.
You do love
But again, the point is like,
Fun, baby.
if you knew that's what I'm saying, Mo. You know what I'm saying?
Seth, you'd be a great bar owner.
You see, I'd walk in.
You would be a great bar owner.
It's on me.
Yeah.
All right, guys. That's our take on Palantir. I guess, yeah, that was funny, Paul. I just wanted to see what your thoughts are, and I'm not surprised.
I mean, it's just absolute lunacy, and I think it just proves it right here. And guys, one of the exercises you should do here is you should look at a company without looking at who the company is. Don't give yourself the bias. Because somebody might sit there and say, well, it's about the potential. You'll see the potential in the past revenue. If you see revenue growing, all of a sudden, unless there's some amazing new idea or something that's going to happen, the revenue is probably going to grow at a slower pace than in the past. This is how you actually should look at companies. Take your bias out of the company. What would I pay for these numbers based on the last 5 years' numbers? Actually, it's a good idea. In fact, maybe we should add that to the stock analyzer tool. We should allow people to do a screener and tell me, don't tell me what the company is. Just give me the list of companies that look at the financials, and I decide if I want it or not. That's an idea.
If you like this software, you can get it as a part of our Patreon. Join the Patreon. I would say, Paul, the more I read about Warren Buffett, Manish Pabrai, Sven is doing videos. They do not chase this crap. They simply don't chase hope. It's just, there's no belief in it.
They'll look at hope, but they're going to value hope. They value growth at what growth is worth, not something over. And more power to you.
Yep.
And then you'll blame something else in the future when you lose all your money. And I'm not trying to be a jerk. I will be very, very glad when you do.
That's our take. Fondle the thumbs up, and we'll see you on the live streams. Thanks for watching.